Today is Monday, April 3rd, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, the Senior Financial Economist. Steve, why don't we start with the grain markets this morning? The USDA March acreage and stocks reports was Friday. Can you comment on that report and the market reaction to it?
The report was bearish. The USDA found more stocks of corn, beans, and wheat this year than a year ago at this time. And they found, as expected, farmers switching acres from corn and wheat to soybeans. The soybean market broke down below support, and there was some heavy fund, what we think is long liquidation, both in soybeans and soybean meal. The surprise came in that the corn market and wheat market actually ended up higher on the day. And there's thought maybe that, you sell the rumor by the fact type thing. There might have been some short covering. But there also, especially in corn, was a lot of commercial pricing, thinking that the lows on Thursday was a pretty good low for at least the month of April, going into the unknown of the weather. And right now there's just too many beans. Big crop in South America, farmers adding more acres, and it's going to be tough to get through that.
I want to ask you this, Steve. The U.S. and China will have a meeting this week. Will the grain markets be affected by this meeting? What, if anything, is the market expecting?
Well, I think that a couple of things. I think that on Friday the President of the United States said that he would like to talk to the Chinese about North Korea, and if they don't have any conversations, he will take care of North Korea by himself. That's pretty strong talk, and I think that there might be some concern about what could come from that. Also, I think he's going to address some of the trade issues, thinking that right now the balance between China exports to the U.S. and China imports from the U.S. are not equal, and that the concern could be a trade war or some type of tariff on Chinese imports, and I think the market's very concerned about that.
Conversely, if things go well with these discussions with China, could that help the market?
It could, but the meeting with the German Chancellor was considered a bad meeting, and so he's one for one right now as far as having bad meetings. He meets with the head of Egypt this week also, so we'll just kind of see how that unfolds.
Let's look at the weather for a minute. There was talk of too much rain in parts of the U.S. and Argentina, and conversely not enough precipitation in the EU and Russia this week. Does this mean anything?
It could. I think we have one consultant that right now feels that the Northern Hemisphere 2017 weather is going to be drier than normal, especially in Europe and in the Black Sea area. So you might be seeing some buying today in corn and wheat because of that, in case that weather pattern doesn't change. And again, we're between El Nino and La Nina. We really don't know what that means. The flooding in the southern part of the United States, the rains this week in the Midwest, more rains are expected next week in the Midwest, could slow the corn planting. And the flooding in Argentina could be like last year, where they actually lose part of their crop because of too much rain at harvest time. So this time of year we trade weather. April 1st we turn the calendar and we start trading weather.
Finally, Steve, you mentioned possibly some fund liquidation on the report and soybeans on Friday. What is the current fund position in the grains generally?
We were surprised on Friday when they said that the funds are short 150,000 corn contracts. That's about 50,000 more than what we thought they would be. And the funds right now are short almost a record amount of wheat here in Chicago. So again, going into the weather pattern like this, or uncertainty of the weather pattern, that's a little bit too short for the market. And then they're only long about 20,000 beans now at 20,000 meal. And so they've liquidated a huge long position in the bean market. So they're kind of neutral right now, and so they could go either way. But I think the funds right now are just too short.
Alan, let's talk industrial metals a bit. The copper futures bottomed in January of 2016 and have since rallied almost 90 cents a pound. What are the economic implications of a bull market for copper futures?
Well, basically, all the strength that we're seeing in the copper indicates that the global economy is on the mend. And in fact, it's not just the copper that has advanced in price over the last year or so. It's been other industrial metals. Iron ore has been up quite a bit, nickel, zinc, Other markets that we don't really follow that closely all have had sustained gains. So the implication for all of the strength in the industrial metals is that the global economy is improving, and it will likely continue to improve, and all that goes with it, including higher prices elsewhere, more inflation, higher stock indices. Those are the ramifications, I believe, of what we're seeing in the copper market.
Turning toward the dollar, the U.S. dollar fell to a 4-month low early last week. Why has the greenback underperformed the news lately, especially since the Federal Open Market Committee is on track to increase its Fed funds rate possibly 2 more times this year?
Well, one reason is that apparently the Trump administration is not that interested in pursuing a strong dollar policy, which basically reverses decades of what had basically been a strong dollar policy. But I think as important is interest rate differentials are now beginning to turn against the dollar. Last year, when we saw the dollar index advancing to a 14-year high, this was a period where the Fed was very aggressive in their rhetoric as far as raising rates. Other central banks were very accommodative. Now what we're seeing this year is the Fed on a measured pace to raise rates, while other central banks are likely to back away from their accommodation, especially the ECB, and even the Bank of England is likely to raise rates next year. So we feel that the dollar index is likely to just trade sideways, and its advantage that it had last year is now gone.
Finally, Alan, first quarter corporate earnings season doesn't start until mid-April. However, analysts are currently looking forward to a very strong performance. Earnings for the S&P 500 companies are expected to increase an average of 10.4%, which would be the best year-to-year gain since the third quarter of 2011, when earnings grew 18%. In addition, the trend for global corporate earnings is improving for the first time since 2011. Are rising corporate earning estimates the main reason for the bull market in stock index futures?
Actually, no. Earnings are a lagging indicator because by definition they're late. They're as much as 3 months late. So it's nice to see rising earnings, and you would tend to see, or would like to see, increasing earnings in a bull market. But I think what is more important than that is the interest rate situation. Even though the Fed is going to raise rates at least 2 more times this year, most likely, interest rates overall in the U.S. and globally are still very supportive and very accommodative. So I believe it's the interest rate influence that will continue to dominate, to take the indices higher, including new historical highs. And though it is nice to see earnings increasing and the headlines look good, I would not focus on earnings analysis as a leading indicator. Other factors are suggesting higher prices for the indices.
Okay, remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.